Good morning, everybody. Just waiting for that data feed to come through. Good morning. It is 9 o'clock in New York. August 10th, Monday here. We really don't have a whole lot of news events this week. The only Red Star event for the U.S. markets is going to be CPI here, 8:30 on Wednesday, an hour before the bell. Actually, we have core retail sales 8:30 as well, but pretty light on the news events for the week. There's also going to be a GDP number out of the Great Britain pound at 2 a.m. But for today, JOLTS is going to be at 10 a.m. Yellow Star news event, not that important. And then this evening, the NAB business confidence for the Australian dollar and the current account for the Japanese yen. So that's what we have for today. We're going to just start off. I'm going to go over the daily chart in every single one of these markets. I'll start from the top with gold. Now, gold is inside of this daily extension. When we had broken out, we broke out like March 17th. I think that was that the beginning of the breakout was March 17th, and that is for gold and silver. There was a high to high extension that traded in the overnight right before the futures rolled over, and that has gone through its negative 61. That daily sequence is from 1974.7 too high, and we were bullish above on the daily chart a 2018, bullish above 2018. If you move down to the hourly, there was an entirely different sequence coming out of lows. When the futures market had rolled over, which was on Wednesday the 29th, our first traditional was here, and then we moved into extensions. Those extensions completed targets. We had a same anchor new high. Those same anchor new high completed profit targets, and that was actually our high of the market at the time. And then we failed to hold the continuation. Now, coming out of the highs in what we would like to see for this market to confirm, there was a traditional short that traded due target, and I'm just taking that next high to low. That next high to low, we are on the hourly time frame most likely just going to consolidate between this 2050 and 2032 in a little bit of a ping pong match here in gold. But everything in this range is still bullish on the higher time frame, but we're not going to have a very aggressive move higher. It'll just be a back and forth. Moving on to silver, the higher time frame had an extension that traded on the 28th of July. That upside target was a 28.04. We've completed that upside target. Now, we can continue to move through these highs here, but there is also just on the higher time frame, this would become a possibility. This same anchor high, and I don't want to rule it out because it's definitely a buy setup if we get there. That 38% retracement would be a 25.72. Now, that's a pretty significant pullback, but there's a lot of volatility here in silver. Now, if we go down to the hourly time frame, coming out of our lows, we had a 50% retracement long trade on Sunday of last week. That totally and completely went through targets. We began extensions. We are inside of right now, that is our support level, a same anchor new high sequence from what was the Sunday night open of the prior week too high. The Sunday night open of the prior week too high. And that gives us a 27.59. We need to validate this support level by breaking out of the opposing short. So you can see there was a short from what is Friday's high to low sold into. And then again, this is what we're running into. So I see, just like gold, probably a little bit more of a consolidation on the hourly time frame to happen. As far as if we were to trade a brand new level, that 25.72 retest of highs, significantly lower, but definitely a possibility. And just another variation, potential variation, would be last week's lows from Sunday night to high. If we do dip lower, that would line right up with this 61, so at 27.04. Moving on to the Russell, you're looking at a daily chart. The Russell has a higher time frame profit target based on the pullback of June 15th, that target is a 1625. Now, last week we broke out of the highs of June. We broke out of them really on Friday. So that level, just as a standard support resistance, should definitely be paid attention to. I'm going to mark up that swing high here. Should take it to the orange. Take it dotted. This also was a leg start. So that's right around like 1540. So at any point in time, if we do trade a 1540 this week in the Russell, you'd be retesting a previous high. Now, if you go to the smaller time frame, we also have what is an extension long. And that is from the July 23rd high to high. We have completed profit targets. We had this extension trade last week on Thursday and Friday. We ripped into the close and completed profit targets. The same anchor new high would be a 1549.8, and then there would also be the 50% retracement at 1542. So those are 1549.8, call it 1550, and 1542 are going to be two different potential levels of support. Now, coming out of the lows on Friday, the Russell, which has initially been lagging all year, was really a leader. We held a 50% retracement long from what was the open to high. That traded to its profit target. So I'm using that next traditional, and that's at 1563. That's going to be my first support level here for the Russell, 1563. Moving on to the S&P 500, you're looking at a daily chart. Get rid of a couple of these. Probably not coming into play, so I don't really need them on my chart. And what's important to note is how strong this market has been. Just look at this daily chart. You had a leg start on the 29th of July, and then we had 1, 2, 3, 4, 5, 6, 7 days in a row we're positive. 7 days with closes higher than the previous day. Okay, what is that telling you about the overall strength of the market? It's hot. It's up. We have a daily extension from the July 23rd high to high that is most likely going to be in play this week. The 38% retracement is still significantly below where we are currently trading. It's a 32.28 and that is the first level of support I'd like to see here this week, this 32.28. And then we have 32.20 as the 50% retracement below. So we are a ways away from the support levels that I am anticipating or looking to play on the higher time frame. Moving on to the Dow, which is not yet broken out of the June highs. Nasdaq has, the ES has, the Russell has. But we also have had a really strong move. Look at this daily chart. Literally since this 50% retracement traded at the end of July, we haven't yet completed our targets. Our targets above us do line up with the previous high of June. So that would be a rejection level, most likely 27,610, 620 area. But we've, 1, 2, 3, 4, 5, 6 days in a row, we're looking green. Now, we had some very aggressive moves in the Dow as it made its move up. Tuesday, Wednesday was an aggressive continuation. And the sequence that was trading on Wednesday was the high before the open, too high. We've completed that profit target. Now, we validated upside targets. We began a traditional sequence, and now we've completed those targets. So I'm looking at Friday's low to today's high for a support level, but there's also the possibility we actually begin a brand new extension depending on how aggressive we are from Thursday's high before the open to high. And you can actually see that there's already been participation on that 38% retracement in the overnight session. So we know that there is computer programs attaching themselves to that level. The 50% would be a 27,332 and would be very close to where our gap would be filling. Moving on to the Nasdaq, which the Nasdaq is important to note. We have completed a pretty significant profit target. The lows of 2016 to the highs of 2020 traded its halfway back on the Corona collapse. The upside target is 11,155. We've completed those profit targets. We are most likely going to spend some time going sideways at these highs. Now, we had an extension. There was this extension here because we had what was initially a halfway back long last 2 Fridays ago. And we blew through those targets and we began a new extension. Now, I'm going to leave this extension up. You can see we did get below it, which is a technical break of an extension. And after a technical break of an extension, you can draw the next measured move short. The next measured move short traded in a front run at the open Sunday night, and we have not retested those levels. But you could see there was, selling immediately upon that touch. Now, that downside target is at 10,976. That lines up with the full pullback from the lows of Friday, July 31st to high, 10,987. So if the Nasdaq is going to pull back into a more significant support level, that is where I would be looking here. It's going to line up. There's a couple of swing marks down there as well. But you can see the Nasdaq had a trend break and a reaction to its short, which makes it in a different sequence than the other indexes we're looking at. Moving on to oil, which had a pretty significant setup on Friday that I had mapped out. It was this halfway back long from Thursday, July 30th to high. There's also a profit target of a short. The profit target of the short completed, which is why we're drawing that next measured move short. And that is on the hourly time frame bearish below 42.04. However, the higher time frame has reacted to its support level. And there's, even Sunday night, we got down to those lows again, instant bid. So we will watch for buyers to continue to come in at the 50% retracement long. And actually, they're coming in at the 50% retracement long from the Sunday night. They're ignoring this low. You can see that there's been a reaction from the Sunday night low to high there once, and again here this morning, both in front runs. So because we did come off this support level, this is a daily support level in oil on Friday at the close. We had a leg start. We moved higher. This is going to be a market to watch for continuation higher oil. Moving on to the Usd Jpy, which traded a next traditional measured move short. The currencies had quite a wild move over the last few weeks, but the volatility has definitely contracted as the dollar has gotten stronger again. We have a next halfway back long at a 105.87. So 106.17 to 105.87 is your range here for the USD JPY. For the Australian dollar, we have a traditional sequence from the low of July 24th to the high of August 5th. And then inside of that, there's an extension short sequence that needs to break to confirm 71.94 to low. The euro, I'd like to see this daily trade at a 116.64. We're just inside of this daily extension. We've only traded the 38, and then we're just double topping here at the 119. And then the pound, I'm looking at the 129.68 and 130.15 support level here for the pound. The USD CAD, we had a long sequence. Now there was shorts going into Thursday of last week. Then we flipped long. There was one halfway back to target, two to target. This is the third one at a 133.61. That's the third measured move. But that's what I got here for today. As a reminder, it is Monday. Mondays have typically been slow lately. And if you look at the indexes where they're at, be really patient for these higher time frame levels. I do think CL coming off that daily support level, having these bids in the overnight session is going to be a market you're going to want to pay attention to. But Mondays have been slow. It is the summer. It's August, which is one of the slowest trading months. So keep that in mind. Everybody trade safe. Have a wonderful day. I will share my levels with everyone in my trade room. Take care, and I'll see you there.